Alright, good evening everybody. It is Tuesday, September 26, 2023, here at PreciseAlgorithmTrading.com. Let's talk about the markets, and like always, always lately, I'm gonna start here with the automatic futures contracts that we trade, the automatic futures algorithms that we trade. Literally set up in TradeStation where you start it in the morning and make sure it's on, I should say. It does all of its own trading, and all you got to do is make sure that it doesn't jump off the tracks. Um, just because it is a computer, so you can only trust it so far. Uh, so here's the YM. It's a Dow futures contract. This is since March, and on the weekends I tear this out a little farther to show about a year's worth of data, or even up to 15 months, so that we can see really the progression of how these trades work out and what it can do to your equity. And so on a day like today, when the markets were really volatile, this one's down a little bit, but here recently we've had some great. These green dots represent high equity value in your trading account. So those just happened not very long ago, but today this is the action. This is the YM, the Dow, and you can see here on the 26th it traded, I don't even know how many times that is, quite a bit, and that's because of all the volatility. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times. And for a net down effect, but here lately we've had a run of losses in a row, more losses, but we started having some wins pop in today, which is good. And so I'm looking for, hopefully this thing gets to take off again and we get a series of new green dots to the upside. The Russell, this is the Russell in the same time frame since March, didn't trade today, and I just threw it in here so you can see, you turn it on and it just doesn't trade. So the last time it traded was on the 25th, and it's had a run of really significant losses lately, but in the all-in it doesn't trade near as much, but it still is in an upward sloping equity position. So this is the NASDAQ, which I don't like that it put in this little lower low here on our equity curve. I don't want to see this dip again. But if we do, we do. And we have our account set up so that we can handle those dips, even though they're just no fun. So, but on the all-in, it's all good. So today, in fact, that's probably the big kicker right there. This thing traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 times, and it had one stop out for $5,000, which is rough. And again, we trade 5 contracts, so even if you were trading one contract, that's $1,000, and that's no fun. But we had a great run up here of winners just the other day. Then we've had a whole day of pretty much of a whole day of going back down again, and then we had a nice couple winners in there. So that's how this works, and then you add them all together and it does this, and that's really all there is to it. So all right, let's flip into the actual markets, and let's look at the S&P 500 here. So I'm going to use the futures contract. I might flip back to the SPX, but bottom line here is obviously we're in we had a big washout. We've pulled back up again, and we've pulled lower. Now we're putting in a potentially lower low. We put in a higher low, and that's all in context on the daily chart. Is well, it's going to be easier to look at on a weekly chart. So I am going to, this is hourly on the right hand side. I got a couple things here. Let's look at this. This is a daily chart with average true ranges 1, 2, and 3 across the top, 1, 2, and 3 across the bottom. So that's 3 ATRs to the up and to the down on the yellow lines, and we are below the bottom ATR. And you can see right here we got below the bottom ATR, and then we reversed. I'm not saying that's going to happen. We do have a little tail showing up there, but if we look here on the weekly, so let's talk about waves. And so I've got a yellow line, sorry it's yellow, but a yellow line drawn in here for a wave up when we went from a lower low. So over here we were in a position where we had a high, and then we had a higher low, then we had a higher high and a higher low, and now we've got way up to a higher high. And we could talk about these waves in between, but now we've come down to put in a low and a higher low, and now we put in a lower low. Now if we flip over here to the weekly chart, there's a reason why my Harvard lines are on here, and I also thickened them up so you can see them. It's a very, I mean, it's a nice system in and of itself, but it also tells us where we're at in context. And you can see we had a big breakdown over here back in 2020. That was the pandemic. And then we pulled way back up, got above the Harvard lines. We had a little thrashing around here, but then we really took off. And right in here, we got back below the Harvard lines. It kicked back up for a second, didn't get back above the gold Harvard line, and then it fell from there. Well, now we had another sell-off, and this one was in 3 waves to the down. 1, 2, 3 waves to the downside. And now we started coming back up, and we started putting in a higher highs after that last high there, and we put in a higher low, and then we came back around and we started taking out these higher highs. So we're on a new mission up, it appears, even though this doesn't feel like it right now, from a weekly standpoint. Now at the same time, look, when we went out at the weekly at the upper third ATR, we got hauled right back in. So, you know, we are now in the context. It's a little too close. We're really in the middle of price action here. We're between the upper one and the lower one ATR on a weekly basis. So we're at the mean. And so I also have some levels drawn in here of where some value might be for potential supply and demand. But what I really want to have you look at here is the Harvard lines, the gold Harvard line and the blue one. On a longer term basis, if we close below the blue Harvard line on a weekly basis, actually on a monthly basis, that's an exit of the Harvard strategy in and of itself. So we are below the gold one. I'm going to look for it to probably actually bounce. This happens to be a 50% line in this last move that I have drawn in there, if you see that 50% there. For that wave to come up and this wave to get down, the next higher low really has to take out the mean. It needs to take out the midline, and it doesn't matter how much. So we could get a bounce in this zone, but it won't take out the mean unless we come down and make a tail, or we can come all the way back down to this line in context, and really the uptrend's not broken, this new trend to the upside. And I could draw in channel lines here. This actually ends up looking like a bullish channel that's look like for a regular pullback. So If we flip back to the daily, those same lines are all here. There's our gold Harvard line. Here's our blue Harvard line. Here's our potential levels of supply and demand. And I'm not saying that this thing can't break over and just go all the way back down again, because it could. We could put in, this is a daily low now, and we could pull back up. I'm expecting a bounce anytime, but um, really to come back up probably into about that area there, because it can't be this easy for like the Bears right now. The Bears think that they're in charge, and they are until the market whips back in their face. So I say all that. Well, this doesn't just work. I mean, it works with everything. So let's look at Apple. Where we came up really nicely over the Harvard lines, and we've pulled back. Look, we pulled all the way back to the gold line and got a significant bounce. This is on the daily chart. And now we've come underneath the gold line. This is actually a potential buy area. I mean, you could be a little smarter than just buy it because it's here. But and then I drew in that 50% level as well, which we're sitting at. So, and there's the 3 ATR to the downside, which is sitting right on the blue Harvard line. So this will be interesting. Again, that wave right there was significant, went way up, farther than I ever expected. Now we've pulled back, put in a lower high, pulled back, probably going to put in a little bit of a lower low. It'd be nice if we take out this midline and then bounce back off of that. And again, the green and red moving averages that I got here in the middle, that wave up turned green for a second, and then it's got hauled back under. The next time we pull up, if you go back and look at how these work, it doesn't have to be the next time because there's two, and then we failed. There's one that didn't even make it up. It did wave up, but it didn't turn green, pulled all the way down, then turned green and just tore off to the upside. Here's one that I was kind of talking about where we waved up, turned green, pulled way back into red, and then the next time we went up, we had, I mean, that's 1, 2, 3, 4, 5, 6, 7 week and a half of upside that it got before it put in a lower high right there. So anyway, hopefully you get the idea here. I could take this thing, this is just Apple, but let's put in SPX. Let's go back and look. When SPX first came out of the gate for one of these big moves, after that's 2020, that's the pandemic, we came up, we took out the Harvard lines to the upside, we nashed around for a little bit, and then we really took them out and went higher. Even though we danced back to them, this thing went all the way back up and stayed above those. And in this period right in here, after it got above and then pulled back behind, even in this period right in here where it pulled back way hard into those zones, those were just as hard to take. So it depends on your time frame, of course. That's why you know, with these types of things, you want to play longer term. If you're going to play the shorter term, I'd suggest you flip this thing down to a 1 hour chart. A 1 hour chart, we are obviously, that's, you know, this is all, we started waving down here. We got a high here, a lower, or yeah, higher, that's a higher low, a lower high, and now we've seen a lower low and another lower high, and we've eked out another lower low here, although it's not, this is, I'm not saying that's finished by any means. So really, it depends on your time frame. If you were trading this right now, um, just the SPX, you know, this is getting extended to the downside. That's literally like wave 1 down, wave 2 up, wave 3 down being the biggest one, wave 4 up, wave 5 down. This could be the finishing wave. What if we put in QQQ? This is again on the hourly chart. I could extend this open bigger and see where we land in context back to where eventually, let's do that real quick. Time frame 90 days. So we can see that we came into an area where we actually had originally bounced, and we've exceeded it to the downside. So, but we're still well above the Harvard lines, and that's not showing the hourly chart. So let's the daily look like. We really took off. Price has been mostly above the Harvard lines for a long time in the Nasdaq. This is the Qs. So, and we're back up above them now. And we're also at the 3 ATR to the downside. Something else you could do is throw on a 4th ATR, even a 5th ATR, and you can see what does a move like this turn into. Where do you get the bounce? Do you get the bounce at the 4? And then what's what's that look like if you add on multiple ATRs to the downside? So you can start getting a kind of an idea. It's just a matter of it all turns fractal, and when literally when the well, let's look at this. This is the Qs, and so on the 15, the 30, the 1 hour, and the 4 hour, let's flip this over to /NQ for the Nasdaq futures, which are showing overnight trade now. And overnight they started to bounce, and they're bouncing, and they're not bouncing on the 1 hour yet, but they are bouncing on the 4 hour. /ES. Markets, they have to build from the inside out. They can't start going higher until they start doing it on the 15-minute time frame, and then the 30-minute, and then the hour. They just, I mean, they can obviously gap higher, but then it's going to do it in all of them at once, and then it's going to typically pull back after that. So on the ES, we don't have new green EMAs yet, but that is something to be watching for. And taking out these pivots. You start taking out pivots to the upside, and you start putting in higher highs and higher lows, then you might have something. So anyways, that's what I wanted to go through tonight. And let's flip to look at the bullish percent indexes, which is going to be another indication of potentially when things can bounce. As of right now, we shouldn't be in very many things, especially really anything that has to do with all these indexes that are going significantly lower and everything's red. So here's the Dow. It didn't move today. 40% of the Dow stocks are on a buy signal. The NYA, new red dot today, or red circle today, minus 4.12%. The transports didn't move. The Nasdaq, minus 3%, and it is sitting on a potential support area right there. The OEX, no, let's do the SPX. Put in a new O today. This is a point and figure sell signal, and has been for a couple days. Sorry, I was a way to be able to do a in-depth review, but if you follow this, you can do your own. And we went down 8% today. So as of right now, 38.4% of the S&P 500 stocks are in a point and figure buy signal. So that means the rest of them are on point and figure sell signals, and that is a measure of bullishness versus bearishness. Right now, there are more stocks that are not on point and figure buy signals in the S&P 500. That was the S&P. The OEX, it's easier math for me, so 41%, which means 41 out of 100 are on a point and figure buy signal, and this is the same setup. And we'll start to see it usually bounce here faster than we'll see it bounce on the regular indexes. And then finally, the NASDAQ 100. Put in a new O, down 7.14%. Still on a point and figure buy signal for now. And 39 out of 100 of the NDX stocks are on a point and figure buy signal. This would be the first place I'd be looking for that buy. So that's what I have for tonight. Sorry it took a little while. Thought it was worth diving into, and we will talk to you guys again tomorrow night. Take care.